Implemented Portfolios is a business that we built, or that we started to build about 6 or 7 years ago, that we launched officially about 3.5 years ago. It started as an in-house solution to some frustrations we had with traditional approaches to managing clients' money. Fortunately, it attracted some attention from external parties, and we launched it officially as a business about 3.5 years ago, as I say. When you're thinking about your role as an advisor, and that's clearly the background that we've built this business from, there's a whole bunch of things that you need to be good at. There's a whole bunch of practices, as we call it here, that you need to try and be best at. One of those, and in our view, one of the principal things you need to address and get right for your clients is the asset allocation within their portfolio. There's several different ways of doing that. You need to probably have a bit of an economics background. We know that there's been a very strong influence from central bank policy and from macro views for the last several years at the very least. You probably need some sort of asset consulting type skills about how you're going to evaluate and put a portfolio together and manage it. You need to construct the portfolio in its own right, and how are you going to run your models and apply those to the various segments of your client base. You're obviously going to need to do some security research, because that's where the true investment obviously underlies. That might be in the form of a managed fund research or individual and direct security researches, such as the exchange traded products that we're here to hear about today. At some point you've got to deliver on that, so there's a trading and execution role that needs to be fulfilled within your business. Once you've got the portfolio up and running and invested it, there's a whole bunch of admin that goes with that. So you've got some options about, are you running it on individual HINs or using a custodial service or a platform or administrative service to help you with that. On an ongoing basis, you're going to have to rebalance these portfolios. How often can you do that? How often should you do that? Probably some corporate actions to deal with, and finally you probably need to tell your clients what you're actually trying to do within those portfolios. So it's not an undertaking that should be lightly taken on, I would suggest to you. Now, it's an advisor audience here, and I've been on your side of the table in these sorts of businesses. So you've got to do some client reviews with them as well. You've got to do some tax planning for your clients. You've got to do some risk management and put some life insurance policies for them in place. There's some retirement planning to think about for the longer term. What happens when they do get to the end of their lives and need to pass on some assets, and perhaps you've got some corporate clients as well, and you might need to do some key person insurance there. Anyone still caught up at the moment? If you're probably a business owner, then you've also got some director's duties. You've got an HR manager's role to play. There's a sales and marketing role if you want to grow your business. That probably means you've got to do some networking. And finally, you might want to make a quid out of your business, so you need a succession plan on how you're going to get out of this. It's a big job. It's a big job. So where does that lead us to? Well, these are the questions that I think we all should be asking, and as I mentioned before, I'm not going to dare to suggest that we have all the answers, but I think these are questions that may be confronting, and we all get caught up in the day-to-day operations of our business. But where is your true expertise? It may be in all of those blue things. It may be that you're an expert asset allocator and portfolio construction, implementer and remodeler. It may be that your skills more lie in the strategic side of your client relationships, in doing the structures and advice and longer term planning. More importantly, no matter where your expertise is, where in terms of the business growth objectives that you have, should you be spending your time, and where should you be developing your expertise? And finally, one last question: what do your clients actually value? Do they value your stock picking ability? Do they value your abilities as an asset allocator? Or do they value the long-term relationship and the trust they've built with you over many, many years? So for us, we think the partnership that we have with advisors allows them to take advantage of allows them to take a genuine long-term view, which is the true advantage they have. There's a fantastic article that was in the Wall Street Journal earlier this year by Jason Zweig, who writes the Intelligent Investor column, and he spoke about saving investors from themselves. He caught my attention from the outset as someone who writes weekly, monthly and quarterly commentaries. He said he was asked at a journalism conference, "What is it that you do?" And he said, "I try and write the same thing 50 or 100 times a year and have my editor and my audience think I'm telling them something different." People need good advice. What they actually want is advice that sounds good, and they're often not the same thing. He included in that article a quote from Ben Graham, which is speaking to the same principle there, that as an advisor, with the trust that you've built in your clients, the best thing you can do for them is to save them from themselves. One quick example of what that actually looks like. The chart here I'm showing is from Columbia Management. It's out of the US again. We've got the purple line is the S&P 500 index. The grey bars are funds flows. I'm not sure there's anyone who'd want to disagree that we don't see the same sorts of characteristics happening in markets all around the world. Clearly what we're showing here is that as markets go up, funds flow go in. We're buying at the tops. As markets go down, we're selling and exiting these funds, or certainly much less going into them. So we tend to be unwinding positions at the bottom. And of course it's intuitive to us that we should be trying to do exactly the opposite of that. So if as an advisor you have a principled, transparent and communicable approach about how you're doing this, and to us asset allocation's at the absolute heart of that, then you can serve a really important function for your clients in saving them from themselves and taking that genuine contrarian approach.